Bitcoin is navigating a critical phase in its market cycle, with price action shaped by whale movements, high leverage in futures, ETF-driven capital rotation, and a subtle but noticeable shift in sentiment across the crypto space. While institutional inflows continue to provide structural support, near-term risks of liquidation and technical breakdowns cannot be ignored. The next moves will likely be decisive in setting Bitcoin's trajectory for the remainder of the year. Bitcoin's price action has entered a delicate phase, caught between strong institutional flows and mounting liquidation risks. While the broader trend still enjoys structural support from ETFs and dominant market positioning, short-term signals suggest caution. Whales, leveraged futures markets, and a recent technical breakdown are weighing on sentiment, setting the stage for volatile moves in the coming days. Whale activity and leverage risks on. September 20th. Derivatives data revealed a striking milestone for the cryptocurrency market. Total futures open interest across major assets reached a record of more than $200 billion. Much of this activity was concentrated in Bitcoin, where perpetual contracts alone were trading volumes nearly 8 to 10 times larger than the underlying spot market. This imbalance highlights just how leveraged the market has become, with short-term positions dominating overall flows. At the same time, a whale transaction added to the sense of unease. A single movement of 80,000 Bitcoin, worth nearly $10 billion, was recorded through Galaxy Digital. While not all large transfers translate directly into selling pressure, the scale of this transaction raised fears of a potential liquidity trap forming near the $117,000 range. Historically, large inflows to exchanges have often preceded sharp price declines, as other market participants move preemptively to reduce exposure and avoid cascading liquidations. In this case, analysts warn that a drop toward the $104,500 region could liquidate over $10 billion in leveraged long positions. Conversely, if price action flips bullish and rises to $124,000, more than $5 billion in short positions could be wiped out. This imbalance underscores just how fragile the current structure is, with both sides of the market exposed to extreme volatility. For traders and investors alike, monitoring on-chain wallet movements and exchange inflows will be critical. Sharp spikes in exchange deposits from large wallets often serve as early warning signals of upcoming volatility, giving insight into whether whales are preparing to offload positions or test market liquidity. ETF-driven altcoin rotation. Historically, large inflows to exchanges have often preceded sharp price declines, as other market participants move preemptively to reduce exposure and avoid cascading liquidations. In this case, analysts warn that a drop toward the $104,500 region could liquidate over $10 billion in leveraged long positions. Conversely, if price action flips bullish and rises to $124,000, more than $5 billion in short positions could be wiped out. This imbalance underscores just how fragile the current structure is, with both sides of the market exposed to extreme volatility. While whale activity fuels uncertainty in Bitcoin, the ETF market is driving broader structural changes across crypto assets. On September 20th, Grayscale launched its Digital Large Cap ETF, a product that allocates the majority of its holdings to Bitcoin, but also dedicates a meaningful share to Ethereum, XRP, Solana, and Cardano. This diversified approach has already delivered strong performance, returning over 40% year-to-date and even outpacing Bitcoin itself since June. The fund's success highlights a growing appetite among institutional investors for diversified exposure. By bundling leading altcoins alongside Bitcoin, it reduces reliance on a single asset and positions investors to benefit from strength in the broader market. For Bitcoin, the immediate impact is mixed. On one hand, the fund draws capital into altcoins, temporarily reducing Bitcoin's dominance. On the other hand, Bitcoin remains the anchor asset in the portfolio, ensuring that institutional flows continue to treat it as the cornerstone of digital asset exposure. Even with rotation underway, the reality is that Bitcoin-based ETFs still command the lion's share of institutional assets. Spot Bitcoin ETFs in the United States now hold more than $150 billion in combined assets under management, continuing to grow month over month. This structural demand provides a long-term support base for Bitcoin, even as capital temporarily rotates into altcoins through multi-asset funds. Technical breakdown and sentiment shift. From a technical perspective, Bitcoin's recent price action suggests weakening momentum. After failing to hold above the 23.6% Fibonacci retracement level near 115,400 and slipping below the 7-day simple moving average around 116,000, bearish sentiment has begun to dominate. Momentum indicators confirm this shift. The moving average convergence-divergence histogram, while still positive, is losing strength. Similarly, the relative strength index on shorter time frames has fallen to the mid-50s, signaling cooling momentum after weeks of bullish pressure. Traders are increasingly wary that the recent breakout attempt has failed, leaving Bitcoin vulnerable to a deeper retracement. Derivatives markets are echoing this bearish tone. Data shows that shorts currently dominate liquidations, with nearly 95% of 4-hour liquidations on the bearish side. This suggests that while selling pressure is strong, many positions remain vulnerable to further downside before the market stabilizes. Key technical levels to monitor include the pivot point near 115,800, which now serves as a crucial battleground. Sustained trading below this zone could open the door for a retest of the 38.2% Fibonacci level, sitting around 113,800. Conclusion: a market at a crossroads. Bitcoin's current dip reflects a combination of factors: profit-taking after a failed breakout, whale-driven liquidity risks, and the gradual shift of capital into altcoins fueled by new ETF products. In the short term, these elements are producing a cautious, bearish tone. Traders are focused on whether Bitcoin can reclaim 116,000 and reestablish upward momentum, or whether whale activity will spark a deeper correction toward the lower Fibonacci retracement levels. Despite these short-term pressures, the long-term outlook remains anchored by structural support. Institutional inflows into Bitcoin ETFs continue to grow, and Bitcoin's dominance in the market remains strong, holding above 57%. As long as this structural base remains intact, Bitcoin retains its position as the foundation of the digital asset ecosystem. For now, all eyes remain on whale wallet activity, exchange inflow data, and whether Bitcoin can hold above the key technical zones. A failure to reclaim resistance could extend the correction, but a swift rebound would invalidate the bearish setup and restore confidence. The coming days may prove decisive in determining whether this is a pause before another rally or the start of a deeper consolidation phase.